got a video from this smooth ball hitter dude that might do you some justice.
Is the war over? Because if you look at markets, everything seems to be turning around, right? Take a look at oil here for a second. We had a pop at 95, ran to 130, made national headlines, but now we have retraced 100% back to the original launch point, right, of that weak leg. Same thing on gold. Gold hit 2,078 bucks an ounce, and we've retraced 100%. And lastly, our big trade, the European dollar, we sold massively, and now we're meandering around what looks like a 38.2 Fibonacci retracement level. All right, so we're going to go into the details as to why fundamentally we see these markets pulling back, but how there is still a looming crisis that could have these things turn all the way around. All right, let's go. Okay, guys, let's get to these markets. If you guys are new, by the way, again, make sure you guys subscribe. And if you like the video, if it's educational, if it helps you, like the video for your boy. I appreciate it. When we look at the euro, right, we've been selling this euro since about 3 weeks ago, really. Okay, from the high, right around the time everyone started to talk about that there's going to be invasion of Russia going into Ukraine, right? Again, that first headline, I mentioned this a lot, but that first headline was pushed out around February 11th, and that invasion really started to take place in a significant way around February 24th. And if you look here, we see the most dramatic sell side momentum on this euro right around that time. And if you look at our commodities, something like gold, you see this massive push to the upside, and then our sell-off. This was the invasion taking place, all right, the 24th, as I mentioned. And then subsequently after that, as things have escalated, you get this push. But now we're getting a 100% retracement on the commodities, which is pushing our US dollar. Here's our US dollar index. That pushed our US dollar to break out. And now we're at 2022 highs on the USD because basically people were trading in the commodities, and now they're liquidating their commodity positions and buying the US dollar. We can go into a dialogue as to why that's happening. But at the end of the day, there hasn't been any real resolution to the Ukrainian-Russian conflict. If anything, the worst day, the single worst day of this war, which it really is now a war, it's not an invasion anymore. The single worst day of the war transpired on Saturday when there was 34 people or 32 people that died with one single shelling attack on this small little area that the Russian army just ferociously attacked. And so when markets opened Sunday, 5:30 Eastern, right, that was the Australian markets opening up, but in currency markets, US 5:30 Eastern, I was expecting a pretty dramatic sell-off because it was the worst day, right? But the opposite happened, right? Where really we didn't see not only any volatility during that time, but then eventually, like we're in Tuesday now, at the time of this filming, but yesterday we actually saw the euro push to the upside. So right now, market participants are no longer responding to news that comes out about the war, unless it is very significant. I mean, it's not like we have to go nuclear at this point, but anybody that is looking for trading opportunities based on jargon or jawboning coming from Vladimir Putin or Zelensky or Biden having some type of, say on, hey, maybe I'll do the no-fly zone, right? Anything that comes out regarding the war right now isn't moving markets in a way that makes people more fearful that this is going to continue to escalate. And actually, it's doing the opposite. It's making people numb to markets, right? There was a time back when Trump was in office, and Trump would have a lot of commentary about a lot of different things, right? Notably, he spoke about the US dollar being far too expensive. And if we go back and look at the US dollar index, there's a particular quarter, I'm gonna head to the weekly here on the US index. There's a particular quarter where we saw a massive move on the US dollar, okay? And there it is, 2018. You see this run here on the USD? Well, this was enormous. And yes, we did print a beautiful CPI number. Basically, we're getting inflation, and it wasn't helicopter money inflation where we were getting money sent straight into our bank accounts because the Fed was printing it. It was inflation coming because consumers were spending more of the money that was in the economy, and savings accounts were emptying out because people were doing more investing. and buying more real estate and opening up more businesses. 2018 was a huge surge. When you look at tech stocks in 2018, this was when we saw record numbers coming out of Amazon and Facebook. This was just the US economy getting a lot stronger. There were many moments where Trump was getting frustrated with Powell because Powell was increasing rates. And if we head over here and take a look, notice what we see happening. 2018, right around that time, rates started to increase massively. Trump didn't want this because he felt like it would tighten what was happening in the US economy, which was a massive explosion, right? And so you saw the US dollar just absolutely pile to the upside because of what Trump was saying in the rhetoric around him wanting a stronger dollar. Okay, so the same thing is technically happening now when it comes to the Russian war. There are many people with lots of commentary globally about how they feel about the war, and it's mostly very negative. But since people are becoming more and more numb to what's happening, you actually see markets not responding to the point to where they're even turning around. All right, again, like our oil, I like our gold here and oil. The signal that we're going to see drive markets, not the noise, because there's nothing but noise coming out about how bad things are, which is totally understandable. The war is getting worse. Okay, even the headlines today that he bombed his residential building, someone did pass. I mean, it's insane, and this is happening right when there were going to be different diplomats coming in to try to figure out how to calm this. They were coming into Ukraine, and Putin bombed an area that they were going to be in right before they met, right? So this is getting worse, but that is no longer affecting markets. So there's going to be an entirely new perspective or entirely new variable that comes in that alerts markets to understand that, hey, this is not going away. And once that happens, more than likely, you're going to start to get a turnaround here, because my persuasion, the way I'm really leaning still, is that this thing isn't going away anytime soon. When you have sanctions, it's very rare those sanctions get lifted within months. Sanctions can sometimes last for years. Okay. And at the end of the day, with Russia being such a massive country with so many different global footprints all over the world, 80% of UK oil comes from Russia. Okay. We're still going to see massive implications of this war in markets today. And I don't think anyone needs to think that the trade is quote unquote over, which is what a lot of people are kind of assuming because things have fell. This could be really perceived as a trading opportunity because things have sold off so dramatically, and we have price discovery. Price discovery being markets have found a new price point, and now it's going to be a lot easier for the market to trade back into that same price area, right? I love price discovery. It's very, very fortunate part to trading markets, and also with technical. So let me know you guys' input. All right, where do you stand on this? Why are markets collapsing? Is the trade over? What are people really thinking here? We're going to be inside of our fundamental.
All right.
Hey, what's up, my friend? So in today's.
So I wanted to talk about that. I get a lot of messages about price in the swing and what's going on. That video is about 10 days old. You guys still with me?
Yes.
Yes.
That video is about 10 days old. And, you know, at the time when he shot that video, it was after we got the huge up move in oil, and then it pulled back, right? Now it's starting to climb back higher. I don't think any of us thought that price was falling back forever. But, you know, I think it's important to understand that the size of those moves that we got, you know, the 700 pip moves on Euro NZD, all those Euro pairs, all these moves to the downside, they had to retrace, right, before they start pushing in that direction again. Now, eventually they will find the bottom. And, you know, I think the currency pairs will bottom out, you know, before the commodities reach their tops, right? Like there's always room for the commodities to get stronger. But I don't think the euro dollar will implode due to the war. I mean, I think the value of it gets dragged through the mud a little bit. But when as the people realize that the European economy isn't going to crumble, then I think the euro dollar will find the bottom, and start rebounding. What he spoke about the energy and the energy crisis that's looming, over there. I think that will be the tale of the tape, so to speak. I think how the European Union and the Great Britain government respond to that energy crisis, where if they find energy from elsewhere or whatever, as long as they show that they can still provide energy at, I guess, a reasonably affordable price. And that you can put air quotes around that, because we don't know what that reasonably affordable price is. I mean, here in the United States, we're getting gas at reasonably affordable prices too, but I think people are this summer, people will be ready to rebel. I think with gas being as expensive as it is, do you know what gas is in New York, Shay?
It's like $4.39.
That's cheap.
What?
Well, I mean,
How much is gas? Where you at?
Well, I mean, in Texas it's almost $4, or 3.5 or whatever. But that's expensive for this area. Hey, Essence,
Yes.
what is gas in Cali?
Like $7.
Is it really?
Yeah, like
Ridiculous?
some gas
That's what I'm
stations
talking
have
about. So gas will be $10 a gallon in Cali by the summertime. So I don't know. Like I think that that it's going to get worse before it gets better. So I think that we'll continue to see a little downward action, right? But just expect for there to be retracements, in between the downward action. There's not a lot, as far as these weekly charts. I think NZD CAD has a barely bearish order block. It gave us a daily, like on Thursday. I don't, and it wicked us in perfectly, and it started pushing down, but the week ran out. So I believe this is going to keep pushing down. As you can see, there was a monthly, it tapped into the monthly, pushed down, it retraced, retapped back into that monthly. And I believe it'll push down a little bit more. I think that over the next few weeks and maybe months, the Canadian dollar is going to strengthen, based on the effects of the oil trade, right? It's an oil economy. It always takes a little bit of time for the currency to catch up to the prices of oil, but it's going to catch up to the price of oil. And I think over the next few months, we'll see the Canadian dollar start to push up, and it might even push up higher than it has normally pushed up, due to the price of oil. I expect it to be higher than what it normally is. Gold was a trade that I expected to push down, and it pushed down a little bit, but it went all the way back up. If you look at this, the weekly order block, I expected gold to sell out. All it did was come back up and tap in, or it just kind of missed the tap in, but the wicks match. So I expect gold to push down, at least to touch this order block down here. I don't think that'll be a permanent move either, but it's a necessary retracement, right? there's still liquidity up here in this wick, but you know, it's showing that it needs to push down first before it pushes back up. So if you trade gold, that's kind of what I would look for heading into the next week. If you guys are still doing the easy money strategy, which I haven't done in the last 2 weeks because the markets haven't been moving the same, at least on the currency pairs. But if you're looking to do that, I like Euro NZD. I like it for a couple of different reasons. If you look at the wick of this green candle where price pushed to, if you take that run up here in the pullback, price right now is at the 78.6. So if you take this move up to this wick, this pullback is right at the 78.6. So it'll be nice to see this push back up to the upside. I put a Fibonacci on just the red candle, and it's about 100 pip move to the golden zone here. So when the market opens up tomorrow, I'm going to look at it, and maybe I will take this trade on the easy money strategy, but it's really going to depend. It's 125 pips. It really just depends on what I'm looking at once that hour runs out. Like once the they open it up to us to trade, once the spreads drop. The JPY pairs, they all had huge runs. I don't know how much of a pullback we can expect, but they really didn't pull back last week. So I would think that we should get, you know, a decent size pullback. Again, I would have to see these moves start to happen before I just hopped in. Just 134 pips on NJ. A little bit more on GJ. About 190 on GJ. I need to go back and redo these order blocks because that thing crashed right through. It's still in the wick there. Does anybody have any pairs they want to look at?
Yeah, GPP cat or wait, is it GPP cat? Can you hear me?
Yeah, I can hear you.
Oh, okay, yeah. I think it's GPP cat or Euro cat. One of them.
The thing had a beautiful Wyckoff move. I would want to see price pull back first. And then I would look, excuse me, I'll look to get in for a sale.
Yeah, I was thinking the same. And USD CAD for next one. It's so quiet.
It's pushing through this order block. What's that?
I said it's so quiet. How's everybody doing today? Y'all awake over there?
We here.
That's not but, hey, quiet is nice, you know, like they're never quiet on the 5 o'clock call. It looks like this is going to keep pushing down. It's a bunch of order blocks that it needs to bust through. 1, 2, 3, 4, 5 in a row. This is a monthly order block that it's in right now. But it needs to bust through 5 dailies. You know, all things considered, I think it's still going to push down. You know, again, this is a CAD pair, and with the price of oil running hot, the value of the Canadian dollar should start running hot too. You know, I don't have a time frame, but you know, I would look for it to keep pushing down.
So I was salty this week because I did not get in the pair that I got in last week, which I don't know why I didn't get it in, but it went so well. Like the buy was so good.
Which pair?
Let's see. What pair did I do? Was CAD.
CAD CHF or CAD JPY?
Look at the CAD JP. I think
Well, all the
not
JPY,
CHF. It was not CHF.
so the all the JPY pairs went to the moon.
Yeah. Yeah. The CAD was just whoo child. It paid me beautiful last week, and I just don't know why I didn't like. My focus was on something else this week, and I'm like, dang, I should have.
Your focus was on
got
indices, huh?
No, I'm focused on learning something with Nas on the indices, but I really just want, when I focus on something, I just try to learn it so I don't get distracted. But I could have got in this. I could have definitely tried to just split my focus. Because I could have done that. I could have split my focus and just did a small lot size. Look at that beautiful candle. Good Lord.
Every JPY pair went up. That one happened to go up 332 pips. But you was focused on Nas. What did you learn from Nas?
Oh man. I learned some
Learn
good
not to
stuff
trade
with
it?
Nas.
Huh?
I learned some good stuff with Nas. I'm still learning. Still
What did you
learning.
learn? Not to trade it?
No. I did. So I was up $600 on the sale, and I'm just working on minor structure and exiting for this. So you see the sale there? Well, you got to go down
Well,
on the
yeah,
time
I
frame,
see
but
it. But I don't, I mean, if
you
were
know,
you selling it down to
can't
buy it
explain
up?
it.
I guess that's what I'm asking. Were you selling it to buy it?
No, I was just selling it. That was it. Just the sale. Hmm.
Okay. So you were a lower time frame selling it?
Yes. Hmm.
On what time frame?
So that was on Tuesday. I'm gonna go to the daily. And the hourly. So on the hourly, uh I started at midnight.
This is
Well,
Tuesday.
because this is okay. I don't remember what day it was. Could have been before that. But I started at
Hopefully
midnight.
it was on Monday.
Yeah, it could have been on Monday. It could have been on Monday. Whenever that sale was, I kind of like I woke up at 12 midnight if to try to get an optimal entry, but then I didn't enter until later on in the morning, still at an optimal entry, and I sold it down. It was beautiful. But I because I'm still learning, I did it like it started reversing on me, but I didn't realize that it was gonna I didn't realize what was going on at that point. So that's where I messed
But hey,
up.
TT,
Hmm?
it's interesting that you would look for a sale when everything else says buy. I know
Well, because it was a market reversal at the time.
it was a retracement.
Yeah.
The only problem with you doing that is if you're not perfect, then you're gonna lose money. Whereas if you're buying it and you get in wrong and it retraces for a sale, you know, eventually it's going to correct itself and it's like jumping in a river and
Hmm.
floating with, you know, downstream with the river instead of fighting the current. Does that make sense?
Yeah. Hmm.
I just think that like if you're going to trade an indice, I would, if I were going to trade it, I would go with whatever the higher time frame says to do. So even if I screw it up, accidentally, of course, you know, there's a chance that it will go my way. You know, does that make sense?
Yeah. So yeah, there was some other stuff that I was trying to figure out. So even though I did realize that it was a buy overall. Yes, you're right.
If I was going to sell this, I would have jumped in immediately for the sale because this is clearly a buy signal. But I mean, if you're going to sell it, you know, you want to sell it initially and then once it turns around, you can buy it. I got it. You know, like you're not going to enter an indice on a weekly time frame. You're going to enter it on a lower time frame. I don't know what you're looking at. Did you journal it?
Yeah, I have some journals.
I can't hear you.
Yeah. Oh, yes, I do.
Did you take like a screenshot?
Yeah. Yes,
Did you win? Did you win the trade?
I did, but I also I have to go back at my notes to look to see where I lost the trade.
You lost a sell trade?
I won the trade at first, but then I lost a lot of my profits from the overall what I was thinking it was, doing at the time because I didn't understand
I got
the
it.
market
So,
structure.
but was it a sell that you lost on, or was it a buy?
So I was selling.
So you said you were selling and you went into profit,
Yeah.
but
Yeah.
the market turned around and you end up losing that profit
I lost a lot of the profits. Yeah, I lost like 2/3.
because you didn't take the profit on the sell.
Yeah, yes,
Right.
exactly.
And so basically you were selling the retracement, and then it market started doing what it was supposed to do.
Yeah.
And
Yep.
okay. Yeah, I mean that's a prime example of why it's hard to survive, going against the current,
Mhm.
but at least you didn't lose, all of your profit. The US 30 is was the same thing.
Mhm.
Does anybody else have anything they want to look at? Did anybody buy the dip? Buy the dip.
Um, can is there anyone that understands like minor market structure that I can I guess it's like how you say tied to your take profits is at the next OB.
Yeah, I mean, I think everybody. I mean, I understand minor market structure. I mean,
Yeah. So because I know you mainly do the weekly, so I know you were saying other people make the daily, the smaller. But as far as taking your profits, because if you don't if it so taking your profits at like the next OB, um is that the I don't know, can you go back to the pairs, I guess?
which pair?
You could do any cat pair, I guess. I like cat.
What time frame are you using?
You could do 1 hour.
Pretty straight up, literally, TT.
Okay. So, do you guys use the fib when you're trying to determine like what take profit you want like for a smaller time frame? Or
So,
how do you guys use your confirmations?
I think you have to look at the higher time frame first. I don't care what you're trading. It's going to benefit you to look at the higher time frames. You have to understand what direction, like this market is going up, right? So most people are going to look at the higher time frames to come up with areas of interest, and they're going to be over here, right? Because this is where the market has been already. It started here, it pushed down. You get the little Wyckoff playing out. Now it's pushing back up. These areas over here should be your areas of interest, right? Like the structure over here. Are there any order blocks that, as the market pushed down? These are the order blocks that this price is going to hit. Even you can drop down to the 1 hour, you can drop down to the 15-minute, 30. I don't care what time frame you're trading, but you have to do your research, right? And even if you want to mark up your order blocks, well, I mean, on a higher time frame, right? Like if you want to use the 4 hour and you mark up your imbalances over here, your order blocks over here on the 4 hour, as price pushes up, you'll understand where price is probably going to hit next.
Okay, so what I'm more so talking about is if you didn't get in early, like if you didn't get in on Sunday or Monday, and
I'm
say
not.
you're doing
This doesn't matter the day that you get in, TT.
but
I mean,
why not? Because on the pullback, that's my issue. I have like even if I'm entering on an order block, sometimes my the pullbacks are hard, and I feel like I could have a better
okay. So you're saying even if you
entry.
get in on an order block on a lower time frame, then this pullback.
I guess like do you guys use the Fibonacci to help you figure out, like, as a confirmation on where to enter, like on which part to enter? Because one order block may be better than the other one, maybe because I don't fully understand like liquidity.
But TT, liquidity is where money is sitting in the market, right? It's where an imbalance is. It's where people's stops are, right? Stop losses and whatnot. So if you look at this market, we understand that liquidity sits below the trend, right? If you take this trend line, a trader, you understand that people, as the market comes here, they get in the trade, they put their stop loss on this trend line, right? They get in this trade, stop loss goes below. Comes down, they get in, stop loss goes below. Liquidity is all through here. This is liquidity. Eventually, the market will come down and take this liquidity, right? Which is the same thing that I'm saying. If you look at this on a higher time frame, why is price pushing up? There's liquidity. As this market pushed down, people were getting in for sales, and their liquidity is at these order blocks and at these.
That's not what she's asking. Is sometimes you throw the fib on the candles, on the moves, and basically sometimes we throw that fib on there, and you chart out your golden zone, your 78.6, whatever marks you're anticipating the price to pull back to. Sometimes those areas line up with order blocks.
I got you, but
sometimes they don't. So that's just what she's asking. Hey, she's that's how I interpret her question.
But TT,
Yeah.
Are you saying that when you get in, you're saying the pullbacks are hard, which sounds to me like you're getting in based on structure on the 1 hour, but the 4 hour is going to have a pullback that's going to violate that structure. Is that what you're saying?
I think she's asking for an entry point on a lower time frame using the Fibonacci.
Well, yeah. I think you can get that, but you're not going to get it without understanding the higher time frame first.
Correct. Okay, so she knows it's going to buy. Fine. She wants to know where can you, all right, I know it's going to buy. I missed my entry on Sunday. How can I get in on the 1 hour time frame after price has already left my entry point using the Fibonacci?
So again, the Fibonacci is not going to help you get you an entry point on the 1 hour. Understanding what's going on in the higher time frame is going to get you an entry on the lower time frames. For instance, if you miss your entry, right? You're looking at the daily, it's going up. You drop down to the 4 hour, right?
Mm-hmm.
The 4 hour has a pullback and it has an order block.
Mm-hmm.
You can drop down to the 1 hour. At this point, maybe you can get you an entry at this order block, and there it is. Bam. So it's still, you have to understand the higher time frames before you can get, to me, a Fibonacci is not helping you on this pullback. It's understanding structure and going from your higher time frame down to your lower time frame. But it's once the structure, you have to allow the structure to happen at the higher time frame. You can't just jump down and arbitrarily pick an entry. You can do it, but sometimes you're going to get screwed up because, now price is going to pull back past the order. Oh, here's an order block on the 1 hour. I'm going to hop in right here. Well, the market pulled back because the 4 hour, this is a 4 hour pullback. So you need to get your structure from the higher time frame before you can scale down and get your entry on the lower time frame. Does that make sense?
Okay. So box out on the higher time frame. Like I can do an 8 hour, box out the 8 hour, and then go down to like the 15 minutes to get a tighter entry, look for some imbalances or whatever, however you do it. And then that'll get you your better entry.
Yeah, 8 hour, but you still need to you need to drop down like incrementally, right? So even if you look at this 8 hour, right, here's your 8 hour order block. I would still want to drop to the 4 hour,
No, I said even dropping down to the 15 minute on the boxed out portion that you made.
Oh, right here. Yeah.
Because trying to get in on a higher time frame like the 1 hour or higher, the pullback can be, just like ooh wee.
Well, I think if you're doing it correctly, then your pullback won't be it won't be as harsh. So you saw the order, the area that I boxed out on the 4 hour. All this has already happened. Only thing that we were waiting on is this right here. Does that make sense?
Okay, so you're waiting for a price to break out of the, hold on. Oh, I'm sorry, go back. Okay. So I'll wait for price to break out of this box and give me my buy opportunity to get in, and then I'm safest there.
Yes.
Right. Okay.
That's correct.
But not only did it break out, it also it tapped back. It retested.
Right here.
It did.
So
right
that's
there.
your entry, the retest, to make sure that it's
Thank you for
going to
that
go up.
reminder. Thank you for that reminder, because I can never remember where's the retest. Okay. Thank you. Okay. And then one last thing was, can you go ahead and throw the Fibonacci on here real quick?
Where you want to put it? Right here?
I just want to see something. I mean, I guess you can.
It almost comes to the 50%.
Okay.
I have a question when you're done, T. It's B Chase. How's everybody doing? Good morning. Good
I'm
morning.
good. Hi, I'm done.
Good. Okay.
See, Chase.
Yeah. So along, just kind of going along with what you're going over right now. I know that you usually, have taught us, like just enter on a daily and whatever. And I know you guys are going over if you miss your entry. My question that I'm just really, I guess, kind of struggling with is, how far do I drop down before there is more noise, right? So like, is dropping down to the hour low enough, sufficient enough for a lower time frame? Because I know some people literally start from the monthly and they drop all the way down to the 1 minute to look for an entry. And while, that seems to work for some people, I guess my question is, how far do I need to drop down to wait on an order block? And if the order block is formed, isn't the likelihood of it being disrespected higher the lower the time frame? I get so many mixed answers about that, and I'm just trying to figure out like what makes the most sense. Because like I said, I don't mind going from 1 month to 1 minute, but like how necessary is that? And my question is, if I miss my entry on the daily, how far do I need to drop down really to
That's a
get
great
in?
question, B Chase. I think the answer is it depends on you as a trader.
Oh
So,
Lord,
well,
I'm sorry.
let me finish. Let me finish.
Okay, I'm not
So,
gonna let you finish. I'm just like, oh my God.
okay, so if you know what you're looking at, right?
Mhm.
If I know that this pair gave me a weekly, it's buying this week, right? This is a buy. I know I can drop down. I don't care what time frame I drop down to. It's going to be a buy, right? So if you follow the order blocks on the higher time frame, and you keep dropping down, as long as those order blocks are in line with what you're seeing on the higher time frames, then you're going to get in and without feeling any pullbacks, right? So let's just say you drop down from the weekly to the daily, they're aligned. The daily to the 8 hour is aligned. And then you get to the 4 hour and there's a bearish order block on the 4 hour, right? That means that the 4 hour is about to retrace, right? It's still an uptrend, but the 4 hour is going to retrace. So you drop down to the 15-minute and get in for a buy, guess what's going to happen?
It's gonna
Yeah, you're going to lose.
Gonna be in the red for a minute.
right, because there was a bearish order block on the
Yeah,
floor.
and you're going to lose that trade more than likely. You're probably not even going to be in the red because you're going to use that 15-minute time frame, that 10 pip stop loss, and then that 4 hour retrace is going to happen. You're going to get screwed because you didn't pay attention to what the order blocks were telling you. I mean, they have to line up.
So you're saying when they stop lining up, don't enter. Okay, so for instance, if you're seeing a bearish order block on the 4 hour, but the daily through the monthly are showing bullish order blocks, then you're saying enter on the daily or enter on the time frame where the order blocks are aligned with the trend. If the 4 hour is not aligned with the trend, then you really shouldn't enter there or drop down further. Is that what you're saying? That's what
I would wait till the 4 hour finishes retracing. To me, that's a great scenario because I just set my alarm, for 4 hours later or whatever. I mean, you want that retracement to happen. You want to get in right when it finishes.
Right.
Which you would see on a lower time frame.
Yeah.
Which is what so how I'm interpreting what you're asking, if you see the bearish order block on the 4 hour, you already have identified your point of interest from the daily, let's say. So you're going to wait for the retrace to finish. And let's say on the 15-minute, you start to see market structure making higher highs and lower lows. That's when you're going to enter because the lower time frame is showing that the retrace is finished.
Perfect.
Hey, just real quick. So it could be finished because it's 4 hours, but it might last longer than 4 hours. So you just got to be careful with some of that terminology. You set it for 4 hours, but you still got to look. You still can't just assume, oh, it's 4 hours.
That's what she just said, Sean. She said you got to look at the 15 minutes, see breakup structure, to the upside.
I got you.
So I should be looking for bullish order blocks on the 15-minute.
Market structure.
Yes.
Yeah, you should be seeing the 15-minute time frame is breaking lower highs and the market is starting to create the stairs to go back up.
Okay.
I don't necessarily think it has to be an OB because you already identified your OB on the daily. You're just looking for an entry on that OB.
Oh, yeah. Okay.
So, TT, it might take you a little time to understand market structure, right? But you have to just keep looking at it, keep back testing it.
Yeah.
You know, the reason why to me order blocks are so reliable because it is market structure. You know, the order block, you know, in all intents and purposes, this is a daily candle. There are several candles in these situations where you have a small red candle. This green candle breaks structure. It breaks the structure to the upside, right? Then it comes here, you know, so you might see some structure getting broke to the downside. On the smaller time frames, these are downtrends. These are uptrends. Does that make sense?
Yes, and I think the one of the most important things somebody said was wait for the retest.
Yes, yes, you have to. And which is why I at the end of these order blocks, I say wait for the tap in because it retests, it taps you in and goes higher. Right? When we looked at that, when we looked
Yeah.
at that time frame, you saw it come back and tap you in. That's a retest.
Yes. Those
If it,
tap-ins are retest.
yeah,
I
if it
didn't.
doesn't tap you in, then wait for the next trade. You know, we just have to be patient, man. Like, don't feel like you have to be in a trade. Don't feel like, oh, I'm missing out. You know,
Don't chase
that's gonna get you
price.
killed.
Not chasing price, but waiting for it to come to you.
That's it. That's the only way you're gonna have any type of control when you start trading.
A second question, another question in terms of entries. If we are just not confident enough to enter on lower time frames with the understanding of market structure and stuff like that, right? But we really do want to have a re-entry, okay? If we identify a bullish order block on, you know, like say the 4 hour, right? Or the 6 hour to 1 hour or whatever. If we wait for it to come back to, you know, because you know how it goes down to the red candle before going up, couldn't we just enter that way? If we're comfortable with order blocks, can't we just enter on them when we see them?
Yeah, there's nothing wrong with it.
Okay, cool.
But I've done that, and sometimes you can lose more trades sometimes when you do that if you don't wait for the retest.
With TT, that is the retest. When the wick comes back down to the candle to pick you up, that's the retest.
No, I'm talking about what she said. She said just entering on the order block.
No,
Because if
that's
you
not what she said.
manually enter in, for example, if I manually enter in.
B Chase, can you re-explain what you just said?
Yeah. So, okay, like right now, you see how with cat, okay, so we're on CAD. Can you go to the 1 hour real quick? Or wherever we see a bullish order block, I guess. Yeah. Like maybe drop down to can I see the 4 hour? No, it's not one there. Okay. Can you go to the 1 or wait, yeah, the 4 hour. Okay. So for instance, you see how there's a bullish go up. You see how there was a bullish order block right there at the top, all the way at like we're close. No, not that one. Go up. That right there. So you see how price tapped into it because that's a wick. So it's technically, yeah, it technically still pulled back and started going up. I was saying that I would wait for it to pull back down to get my entry, right? So, and it basically did that because that wick is still part of the order block. Well, sometimes. Now, I would have waited for it to come to the body. Usually that's how I enter. Say, for instance, that it did. I would have felt comfortable getting in once it came down there and started going. Like I would have just waited for it to retrace down to that red candle and go up. That's what I'm saying. I'm not saying I would get in as soon as I see the green.
Okay. Yeah. You wait until it gets into the body.
Exactly.
This would be a better example, B Chase.
Yeah. Okay. Yeah.
You have the bearish order block. You have the wick that comes down.
And it wicked
your retest.
Yep. That's the retest. Yep. That's what I would have I would have waited to see that and then gotten in, you know, and I would have probably set a limit there. You know, I would have just set a limit right above that little candle. And, you know, depending on my broker, it may have wicked me and it may not have, but I would be paying attention to it. So as soon as I've seen it, I would have
Okay,
did
yeah.
that. I would have felt comfortable getting it. And then I also measure the distance
Mhm.
between the green candle and the red candle to see if it's drawdown that I feel comfortable sitting in. If it's like 20
Mhm.
pips, I don't mind being in drawdown 20 pips, knowing that this is still a bullish move. Does that make sense?
Yeah. Okay, yeah.
Mm-hmm.
I'm trying to look and see what it looks like on a.
See all them candles. See, the less candles I got to deal with, the happier I
This
am.
is on the 15-minute. Right here.
Yeah, like I just it's just them lower time frames got so many candles, and it's like, nah, I'm good.
But this
The
is what
1
it
hour,
looks like on the 15
I'm gonna
minutes.
just stop at the 1 hour. That's just me though. I
But the
can't.
box is gonna help you break out of that psychologically, right? Well, for
That's true.
me, it will. And
That's
so I
true.
think maybe for you it will.
I don't
Yeah,
know,
that's
TT.
that's true.
You do you trade like this?
Me
Yeah.
trade like what?
No, I'm talking about TT.
Oh, sorry.
Do I
Those
trade like what?
messages.
Like how you taught me?
Yeah. Obviously
Yes.
not. That's not what you're doing.
Yes, it is. That's how I won last week. What you talking about,
You
shorty?
just said so. But you just said you're not comfortable with taking the trade when it comes back.
No, because I took the trade at the beginning of the week is why. So I had trouble with re-enter like this week at when I was looking at another pair, I had trouble with like entering later on in the week. Yeah. So
So
I
listen,
did. Mm-hmm.
this shouldn't be an issue because
Okay.
if this is what I'm listen to what I'm saying. So
Mhm.
I only taught you to do it on a daily, right? Because I only
Mhm.
taught you to do it on a daily because I didn't want you to have to worry about the retracement, right? That was an easy way to do it. But if you want to have a re-entry on a lower time frame, it's the same deal. Just make sure the order blocks line up. Your daily and your 4 hour, right? If they line up, then
I'm gonna have to say my my whatchamacallit was coming from, I guess, I don't know if this has anything to do with it, but like a pair that had just completely went the other way, maybe due to the war or whatever, some thing that I did not analyze with
which pair?
fundamentals. It was, let me go back and get my journal. It was come back, look at here. What is this? Oh, wrong one. Sorry. Let me get out of it. Oh, shoot. I'm sorry. I'm looking at my journal's in another room and I'm looking at my phone journal. I think it was like a GPP pair that it was GPP something in it, and it was a buy for the week. Next thing you know, it dropped like the next day.
There was a GBP pair last week. There was a buy.
Um,
I didn't. I mean, I don't recall.
not last week, but the week before.
GA wasn't.
God, what was that?
Not GC.
Oh, I can find it in here. Oh, you know what? I think it was GPB NZD or oh, yep, it was GPB NZD. Yep, because looking back at this journal here. So I took it for the sale, I was in profit, but then it had reversed on me on March 7th.
Hold
March
on.
7th.
Let me look.
Yep. I took that trade. Yep.
March 7th.
So it was Okay, so it was selling really beautifully.
Right here.
It was selling beautifully March 7th. And then it started buying.
It went all the way down here, March 7th. And then
Okay,
it
and then it
reversed.
started buying up.
Okay, so what was your take profit?
Let me see. I take. Oh, this was my weekly. So I was holding until Thursday. Let me see. It was.
So it sold down and it pulled back. Where did you? So, yeah, did you get in at the beginning of the week?
So I got in. Let me see. I got in GPP NZD. GPP NZD. I got in at 92365. 92365.
Somewhere around here.
Yeah.
You got in on what time frame?
No, that let me see. Probably the 1 hour probably on the smaller time, the 1 hour time frame. This was a trade that I did not have a proper entry.
Well, obviously, but where did you try to take it to?
I tried to take it down to what my analysis was for the week. So the next OB.
Here's the daily order block right here.
Yeah. So
it comes
the
right
next
to it.
OB there.
There's your take profit. It hit it.
I don't know why it did not. It didn't hit it.
This
I
is
don't know
it.
why. It didn't hit it. I don't know. That I'm sorry. The bottom of this bottom OB at the very bottom.
Well,
the
I hear
bottom
what you're
here.
saying, TT, but what I'm
Why
telling
would it be the next one?
this is a daily. You can't ignore this. Is a daily order block.
No, not that I'm ignoring it,
It
but
hit it.
like my
It hit again.
my analysis must have been for this bottom OB is what I'm saying.
Okay, and it hit it. It came to the bottom OB.
No, okay. I don't know how I can.
But
On the screen, you see where a wick is?
I understand what you're saying. Your analysis is that the price is going to come here, right? Is that what you're saying, TT?
Yeah, put it all the way up. We see on the left side where that wick was.
This
The
is a
OB.
monthly order block.
Mm-hmm.
So your analysis is, hey, price is going to push down to this monthly order block. I agree with you. But we can't ignore these other order blocks here, right? So price reacted at that order block. It bounced up. It came and hit it again. It bounced up. It hit it again. It bounced up. Then it pushed through it.
Okay. So yeah, that's where I should have had maybe like partial take profit or
Yeah.
Yeah, I
you
was just
have-
getting ready to
have
ask you,
account for
TT,
these
you
order
didn't
blocks.
move. I was just getting ready to ask you, TT, you didn't ever move your stop loss into profit so that if it does reverse against you, you'll make some money.
I did make some money, yes.
Oh, good. Okay.
I did make some money off of that one, but what I ended up trying to do is sell it again. And
Gotcha.
I didn't realize what market structure was doing.
Got you.
Oh.
Because it weeks you out. So basically it weeks you out to go your way. I hate when that happens.
Well, and that's why so you have to understand yourself as a trader too, right? This is a daily order block that says sell, but it didn't come back and wick you in the trade. So really you shouldn't have had a trade after here for 1-2 more days. There's no other daily order block. Here's a daily order block that says sell that comes back and wicks you in. There's a retest. You're in this trade. You won. So
you on a whole different day now. This was all happening the very next day, or probably the same day.
Let's talk about it. Let's talk about it, TT, because I taught you to do it on a daily. So I'm still looking for you. You don't even have an entry. All right. But because you took this trade, maybe you got an entry here, right? And you caught this long move all the way down into this order block. There's no way you should have lost. You told me you got in right here.
Mhm.
How? How? That's
How?
not what we-
Okay, so that was before we had the conversation about the retracement. So I was looking at how I can have an optimal entry based on the weekly. So basically I forced it and I shouldn't
Okay.
have.
So, okay, you forced it. I'm looking on the 4-hour now. This is where you got in or close to where you got in. You said 9235, right?
Yeah, I think so.
Yeah, this is 9233. So right around this area you got in.
Mhm.
There's a bullish order block that's telling you, hey, price is going to go higher. Another bullish order block. Another bullish order block.
See, that's the problem. I was probably Ubering when that was happening.
You know, if you want to Uber, you'll stay on the daily time frames. You know what I'm saying? You gotta pick your poison. Like you gotta we have to have control as traders. Like we can't switch it up every couple of days. We can't switch it up because we lose a trade. You have to live in your truth. You know, if you're gonna trade the higher time frames, you got to trade the higher time frames until you get good, right? I'm not telling you not to ever expand your horizons, but if you never get one thing down and you move to the next one, you're gonna be in this vicious cycle until you stop trading, right? You have to commit yourself to one thing first, understand that thing, and then move forward. You know, I guess you don't have to do that, but I think that's the best course of action for somebody who's trying to learn to trade. You know, if you can get one thing down that works and you get a great understanding of that one thing, then you can start putting money in your pocket, or you can start finding some confidence in that thing, and then you can grow from that point. But if you learn a little bit of this and it works sometimes, and then you learn a little bit of that and it works sometimes, it's going to lead to more confusion, in my opinion. You know, I mean, you can be very successful on the lower time frames. I'm not saying you can't. But if you're trying to combine and you're trying to jump between your time frames and still trade, you know, to me, there's not going to be very much success in that, right? I think you're going to be more confused in the long run than it's going to help you. Does that make sense?
Mm-mm.
It doesn't.
Mm-mm.
So this is what I mean by that. Every time frame that I've looked at so far, I don't see an entry. I don't understand what made you look at this trade and say, I want to get in this trade, right? Even on the 1 hour, I see a bearish order block. So maybe that's your entry.
I'll tell you, I had a bad entry because I was working on the retracement for that one. That was 2 weeks ago. And I forced it because when I saw it selling, what you say?
Can you explain what you mean by you were working on the retracement?
Oh, okay. So before we had remember you was like, no, don't take the retracement until you see the order block. But I don't know why I was thinking like you take the retracement because you know it's most likely going to retrace. So the way that I had it set up was I can't even tell you. I can't even explain properly because I didn't know what I was doing. I was just forward making a mess. But
okay. Yeah, I mean, okay, I can understand that better because I don't to me, a retracement would be a buy for this because it pushed down for so long. To me, a retracement would be buying it back up, not selling it.
Yes, and that's what I was doing. And so I had got in on I was like, in on a retracement buy.
On a buy, okay, okay,
Yeah.
okay. I think I better understand what you're saying. But I just think going forward,
In which I stopped doing that.
right. But here's something that simplifies it for everybody, no matter what time frame you're on, right? If you're at an order block, if you wait for that order block to tap you in, your trade is going to go better for you, right? It doesn't matter if you're on the 15-minute chart. If the order block lines up, right, and then the next candle comes back and taps you in, like here's a bullish order block, this candle taps you in, that trade is going to go well for you because you were tapped in at the order block. All you got to do at that point is find, you know, your area of exit, right? Like your structure over here. You get tapped in here, you're going to take this trade. That would be your first take profit. There'll be a second take profit. There'll be a final take profit, you know, but you're good because you're in the trade and your liquidity is over here at these highs, right? So these are the areas that you're targeting. If you understand how to, you know, I mean, trade smart money concept, right? Like this is your liquidity. Liquidity is above these highs. So these are the areas you need to target. And I've always been told that, you know, if price has been here, then that's where price will try to go back to. If price comes from right here, once you get this order block, you can target these highs, right? And you're at least going to get take profit. One, this should be your break-even trade. Then you start making money at these other highs. And you would have had both of these during this trade. Now you know your trade is over. So I just think that understanding your order blocks and getting tapped in, you know, tap in is your retest, man. Like that's your retest. So wait to get tapped in and be patient. If you miss the trade, don't, you know, it'll be plenty of other trades to open up. Don't try to be so anxious to hop in the trade that you'll sacrifice your money for it. Just wait. It's plenty of opportunity.
Yeah, that was my big mistake.
Yeah,
Trying to manually enter at that point, but it was not accurate enough.
Right. So you know, I don't want you to get confused. You know, there are a number of different ways to trade successfully. But you need to lock in on which way you're going to do it, and you need to start doing it until you're consistent. Right? Like don't keep switching back, you know, don't test lower time frame structure and then switch back to higher time frame, right? If you're going to trade the lower time frames, I think you need to get consistent trading lower time frames. And if you're going to trade the higher time frames, get consistent in trading the higher time frames. And then you can switch over once you find consistency in either of those. You understand what I'm saying? Does that make sense?
Yeah, but at the same time, never mind. I'll send you a private message.
Well, I mean, if you don't mind sharing, other people might have the same problem.
Well, if on Wednesday, where we know, you know, somebody also had mentioned like in the chat, like the reverse, like the low of the week can come as well on a Wednesday. So
go ahead.
Like if you're getting in a trade, like if you want to take a trade on Wednesday, depending on what you're talking about, like for the higher time frame, are you talking about a daily for a higher time frame, or are you talking about just a week?
Well, I mean, I take my trades on a daily, you know, on the daily candles. So I consider what the weekly is telling me, right? Like I'll look and see if it's a bearish or bullish, you know, weekly order block that I'm on, but I take my trades based on the daily candles, right? But I still have in mind where the trade is. Let's look at this, right? So if you look at the past 1, 2, 3, 4, 5, 6, 7, 8 weeks, there's no weekly order blocks through here, right? Would you agree? Price is just falling. There's no weekly order block. But I know that price tapped into this monthly order block. It came from this monthly order block to this monthly order block. And now it's pushing down. So if I understand that this trend is pushing down, then on my daily time frames, I expect to see daily order blocks pushing down. I can take my trade down based on these daily order blocks. If I get anything like a bullish run, I understand that's a retracement because price tapped into my monthly and it's pushing down. So I'm looking for reasons to sell, not reasons to buy, right? So at these order blocks, now I have entries maybe. Here's an order block. This taps right in. It takes me in the trade. Here's an order block. It comes back. Maybe it doesn't tap in or whatever. I don't know. I'd have to put a fib on here. But if it did tap me in right here, it would take me down further. Here's a bearish order block that doesn't tap me in, so I don't take that trade. So all I'm saying is on these lower time frames, I'm still following what I see in the market, right? From the higher time frames. I'm not looking for reasons to buy as price is coming. I understand that price is moving from this order block to this order block. I don't ignore these pivotal points in here, right? There's liquidity along here. Price is going to react. That's why you see all these wicks. Tap in, pull back, right? You'll see a lot of pullbacks as price mitigates the order blocks or imbalances or whatever. You know, I'm sure there are lower time frame order blocks if we just drop down. You're gonna have reactions, just like this reaction where it tapped in and you say you lost money or whatever. But as it taps in, you're gonna get reactions. But you're trading this down and you're looking for reasons to get in going down, not going up. Now,
But
price
see, look, that order block at the bottom, that bearish order block at the bottom where that red line is. No, the on the daily. Yeah, that one did tap in and then stopped out. You see how it actually did tap in at that body, but then it would have stopped us out. Yes, correct. See how it did go up like that green candle, not that bottom candle, that next green candle did tap us in.
This one?
No, the next one. That did tap in.
I need y'all to stop. I need y'all to stop. I said the next candle wicks you in, right? Where's the tap in?
Oh, it has to be the next candle. So
well, that's what I told you.
Okay. So you're not waiting for price to go there, period. You're waiting for price to tap you in that next day. And if it doesn't,
the next candle, that's your trade. That's your trade. Now.
Okay.
So yeah, don't be confused. If there's no tap in, don't take the trade. There's a reason I tell you.
The next candle tap in. Like you're specifically saying, if the very next candle does not tap you in, delete the limit. Don't wait for it to, don't keep the limit waiting for it to tap in. If it doesn't tap you in on the next candle, it's invalid.
Stay away. Please stay away. Please run away.
Okay.
If it doesn't tap you in the next candle, don't take it, please.
Got it. Okay.
But if you're setting a limit and you're at work.
Yeah. Then delete it. There's a reason for that. Now, there are ways you can take this. For instance, as you can see there, these order blocks are tapped multiple times. As you get more experience, you'll understand when you can take those trades. But for now, no, just take the next candle. I can't believe that that I'm getting this question, but it's the next candle that taps you in. If it doesn't, move on.
But explain the reason, please.
No, not on this call. Well, I'm very serious.
But the next candle can be on a smaller time frame that can tap you in.
It doesn't matter what
still take you out.
It doesn't matter what time frame. If you're trading this on a 15-minute time frame, you want the next candle to tap you in. If you're trading it on the 2-week time frame or on the 6 months time frame,
But you're not gonna always see that.
Because
so-
basically what you're saying is it's just higher risk if it's not that next candle to tap you in, because that next candle that goes, the one after that, could stop you out and then go your way. If it's not the
Yes.
next candle, it's higher risk if it's not the next.
Yes, it's more risk involved, you know, the further off the candles are, right?
Got
And
you.
the
Damn.
problem is you don't have, you know, that deep of an understanding of the order blocks and how price moves between the order blocks, or why it's moving between the order blocks. So
Okay,
the goal in me teaching this easy method is that you don't have to worry, or you don't have to think about it, right? Like it's either it is or it ain't, right? It either taps or it doesn't, and you move to the next trade.
okay, Todd, that part lost me, because remember for the retest, right? Is that not the tap in? And that's not the next candle on the
It
smaller
is the
time
next
frame.
candle. It is the next candle.
No, it's
And
not.
listen to what I'm telling you, Tanisha. It's the next candle that you want. So for instance, you see how you have this order block, this next candle doesn't tap in. This one does. This trade goes your direction. But a lot of times that's not going to happen. So you just want the next candle. If the next candle doesn't tap you in, don't worry about the trade. Does that make sense?
No, because on the one that we were talking about earlier, B Chase was trying to explain to me the retrace, and remember it did retrace, but
okay, but
it
that's
wasn't
because
on
we
the next
dropped.
candle.
All right, that's because we dropped down the time frame, right? If you drop down a time frame, you drop down several time frames, it's always going to be several candles later before it taps in.
Right, so that's what I'm saying.
Well, that's not something I usually practice,
Okay,
because
listen,
I'm
y'all.
actually not. So I have rarely missed daily entries, right? I was just asking that if I did miss it, you know, can I enter on, you know, drop down or whatever? But it's not something that I prefer to practice, and it's not something that I regularly practice, because I've been making sure that I'm disciplined enough that if it does not tap me in the next day, that I don't usually take it. However, I was asking if it was permissible to still hold it until it does, and T is saying no, 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 no. So at the end of the day, his thing is like, if you want to win, you're better off missing a trade than trying to wait to get in a trade and it F's you up. You're just better off protecting your account. And so his rule is, if the next candle don't tap you in, it's a dub. And you just got to find a different setup and stop trying to enter, you know, that trade or whatever. Even if it's a winner, there will be other winners. The market do the same thing every day. Every day it go up, it go down.
B, right before you got on, I had the same question. So you just had the same question in a different, and you just said it differently.
Got you.
So what I see what you're saying. You're saying just do it on a bigger time frame so you can just have a better.
And if you miss your entry, then you just, you know what I'm saying? You just miss it. And I guess me personally, I was like trying, you know, chasing like, oh, I missed it, I want to re-enter. And I'm learning and understanding that the market is always going to present you with opportunities to trade. And it really is best practice that if the next candle doesn't tap you in, just let it go.
On the larger
If
time frame.
nothing else makes sense to me, I'm just the type of person. Whatever makes sense, I'm gonna just stick with that. Everything else that don't make sense, I'm not gonna fool with it, because I'm trying to advance my account. You know what I'm saying? Like whatever is gonna help me do that, I'm better off sticking with what makes sense. His point is that next candle tapping you in is what makes sense. And if it does not, the next thing that makes sense is to let it go. Because there will be another pair that will tap you in. You understand what I'm saying?
Got it.
Yeah,
we
on
gotta
the
learn to
higher
be
time
comfortable.
frame, not on the not
Right,
necessarily on a lower
exactly.
time frame. If I
Correct.
was
I'm talking about on the daily. If on
okay,
the
yeah.
daily,
Mhm.
I miss my entry,
Yeah.
then I miss my entry on the
Yeah,
daily.
because that's super big. But I was talking about on a 15-minute.
Yeah, and maybe we should just for now, maybe we should just leave them alone for now. I'm not saying we don't never learn how to enter on smaller time frames, but maybe until we're profitable, maybe we just keep it simple and leave it alone. That's just my thing though. That's just me. I
But
just
you
do
guys
the
already explained it to me. Like when you got on, he boxed it out for me. So
Mhm.
when he went back, he was like, "Oh, okay. Once you box it out, then you go down to the smaller time frame. Then you can see where it would tap you in at. So you don't necessarily have to. I don't have to try to manually enter on a 15-minute. But if I'm looking at that box, it'll give me that where that entry
But
would be
that's
on the higher
riskier
time
though.
frame.
That's true. And it can happen. But I think he's just trying to tell us that is riskier. If you want to trade it that bad, go off with that, waiting it for the box to tap and everything. You know what I'm saying? But if you want the lower risk entry, do it on the next candle on the daily. And if it don't, it don't. And that's okay.
Yeah, that's the part I'm still not understanding.
So look, listen, Tanisha, you see this order block I have box top?
Mm-hmm. Yeah.
This next candle taps you in. You see that? See the wick of this next candle comes up, taps you in, falls down.
And it was perfect too. It tapped it perfectly, body and all. You wouldn't have got stopped out or nothing. It was a perfect tap in.
Do you see that though?
Mm-hmm.
I see that if I had an entry at the bottom of the green body.
Right here.
Mm-hmm. Yeah. So if I got tapped in. So if I had a 30 pip stop loss,
you wouldn't have a 30 pip stop loss. You would have a 48 pip stop loss. You would have a stop loss at the top of this green candle. This is what your trade would look like, and you would have won your trade.
Tanisha, where you get 30 pips from?
That's not the people.
Well, I'm referring to another trade that I was taking.
But
okay. Because that definitely say 48.5. Like, where she get 30 from?
But this is the problem. How do you just make it up as you go?
I didn't.
It expect to win.
I'm not. I was going by another trade that I had went in. But anyway.
Todd, can you drop down to a lower time frame?
Okay, I can, but why?
Because I want to help her understand an entry point.
Okay. Lower than this?
Yes.
15 minutes or what? Hour?
Yeah, that's fine.
Stop laughing.
Here's another tap in.
Okay.
When does the day start?
This is the hour. Okay.
I don't know when the.
Yeah, I like that.
Well, this is
where you going
right here.
That's the daily.
Well, yeah, this would have been a daily, but this right here is the wick coming to tap in.
Got it. Okay.
So this would have been a perfect.
There's an order block right there on the left hand side.
Mm-hmm.
Within the one. No. Move up. No. Within your stop loss. So at the top of that green wick, right there. Up. Yeah. Now move to the left. You see that OB right there?
This one?
What kind of? Yeah. So I mean that's an entry, but it also minimizes.
It's a smart.
It minimizes your. Right, but I mean, just to help her, I think her problem is the amount of drawdown. So that is typically why people drop down to get a so-and-so sniper entry, so that you're not sitting in so much drawdown. Like psychologically.
Here's your sniper entry right here, sir.
Yeah, but that already happened.
No, this didn't. This would.
You wouldn't. you wouldn't enter there. You would wait for it to break structure. So where your entry is on your short position tool. So that could be a confirmation.
So
So
you would
it
wait for it to
broke.
break here.
No. Where your entry is, it broke that sell candle. The second one, that one, right? So that's your OB, right? And then below,
Right, go ahead.
right, that's your OB, and then below that, where you have your entry right there. So now you see that price is breaking. And then if you keep going down, you'll see more that, like if you would, no, not, I'm sorry, not down there. Wait, I mean, if you drop down further, you would see price creating lower highs and lower lows.
Mhm.
This is what I would say. Once you have this area boxed out, once you have your entry area boxed out, it's all a game. It all becomes much more simple, right?
Right.
Mhm.
To
Yeah.
me, to me, anything in this box as it
Mhm.
starts to break is fair game, right? So
Right.
Mhm.
this
Okay.
tap
Yeah.
in box, once I see lower lows,
Mhm.
I mean, you can get in right here, you can get in right here. All this,
And then you can stack as
yeah.
it goes down.
But I think that honestly, I think this is doing too much for beginners, right? Like this
Agreed.
works for you, Shay, because you're a more experienced trader, or you
Exactly.
understand market structure a little bit better at this point than Tanisha, which is why I taught it very basic for people who are beginning. If you see this order block,
I get that. I just didn't want her to think it's impossible. That's what I would like to see it on a lower time frame.
you're exactly correct. But I personally think that there has to be steps, right? Like I don't think that somebody can go from not understanding how to get into a trade to dropping down those time frames. I think that's more confusing than to see the order block, set your entry, and take the trade.
I agree.
Does that make sense?
It does. Tanisha, see, I'm trying to learn how to read higher time frames. So I started off working from the lower one. So now Todd has me looking at the higher ones. I actually mapped out NC, Todd, if I could share that just to see. And then that may help give you some perspective.
Are you on your iPad, Shay? Huh?
I am, and it's on 29%.
Here,
So-
I'm a stop share. You can share.
Okay, so let's see. All right. So for this one, I started on the weekly, and I did this just now while we were having the call. So I started on the weekly. I'm looking for NC to create a buy. So I drew the fib, and then I dropped down. So this is telling me that I mapped out a rejection.
Can I stop you?
Sorry. Sure.
You say you drew the fib from where to where? Because I see like the 0 point or higher than what I.
I'm looking for a buy. So this is my lowest low to my previous high.
Oh, okay.
Because I'm looking for it to go up. So then this green, this is a 61.8. So I see a rejected price right here. There's a rejection, the wick, it tapped in, and then I dropped down to the daily just to see what else I can see. So this is where I know where it tapped in on the weekly. And then I have a daily OB right here, this purple box. So I marked that up. All right. So look, price tapped the daily OB already right there. Right. So I missed that. And now I went to the 8 hour and I found another OB. So now price is right here. So on Sunday, I'm looking for price to come within this box and for me to get confirmation of a rejection of some sort within this purple box. So that's where I would enter. So I need to see price reject, not break through this 8-hour OB, and then I would buy it back up to here, this green box.
What would you say your rejection would look like? Like, what does rejection within that box look like? Does it look like an engulfing candle? Does it look like some type of like, what does a rejection look like for you to get the confirmation that makes you comfortable enough to take the trade?
So it could be an engulfing doji. I just need to see price break some type of up structure. So this is the price that I'm looking at and I'm working off of. This is my price to the left. So let me see. I guess I can do a horizontal line. So within here, here's some structure. 1 second, baby. 1 second. So I drew this black line. So here I see that there's some unhealthy price action in here. You see all this right here, all this bullish momentum. Price is taking that out right now. Oh wait, sorry, my arrow's on one side. So do you see that? Price is headed down and it's taking out all the liquidity that was in here. So I know why price is going down. Now I just need to see confirmation that it's going up. It's not to say that it won't sell, but for me, I'm looking for it to create some type of market structure within here, whether that be a W, a break of structure, another OB, a break and retest, just something that confirms that it's going to head back up.
Okay. Thank you.
You're welcome. Todd, did I do okay?
Yeah, listen, I
I'm
think
still
you
gonna
did.
enter and exit on the daily, but that was helpful.
No, listen, I think you did fine. But so I think this is a good time to kind of
Yeah, you can have the screen back if you want.
to kind of go back to why I do certain things. So, when I started teaching a class of about 6 people, I only, I taught support resistance, kind of Ruby's method, and it went nowhere fast, right? And I kind of realized over time that everybody's understanding was at a different spot, right? So I kind of had to go back and look at things and try to come up with a way to teach people that could be simple, right? A simple method that you can make money and you can still further your learning, or you could just understand that simple method and make your money and you never need to learn anything different, right? So there was something that occurred to me, in my many hours of studying, that happens, with frequency, right? It's the order blocks that are formed. And all right, let's go back. There are several different types of order blocks, right? This is an order block. This red candle and the green candle that comes that way, that's an order block, right? I don't teach.
You can't see.
Oh, you guys can't see. Oh. Share screen. So this green candle and a red candle, we know that it's a bearish order block. But also this red candle with this green candle that comes halfway up, that's an order block. It's a smart money order block, right? I don't teach these order blocks in this class because it doesn't do any justice to the way that I teach you to trade, right? So these aren't significant to me in this class. Now, you can do like Brianna, and you can go out and learn about order blocks and how to trade different methods. But what I would ask you to do is don't bring that to these meetings, right? That is not for these meetings. And the reason that's not for these meetings is because of this, right? Let's all think back to being in the first grade or kindergarten, right? Or think back to your children, if you have children, nieces and nephews. When you start teaching them to speak, I mean, you don't teach them words like pendulum or, you know, fundamentals, right? You teach them dog, cat, you know, whatever. And you teach them to spell with those small words because they don't understand the larger words. They don't understand how to conjugate. They don't understand sentence structure. Hell, a lot of adults don't understand sentence structure. But the point is, a lot of times there are concepts that you need to understand first before you can start going and flipping through these time frames, right? So I give a very basic method of trading, right? And the first thing people tell me is, oh shit, I don't want to use that big stop loss. Well, hey, buddy, you don't understand how to get down to a lower time frames to use a smaller stop loss. So use the big freaking stop loss. Be a big stop loss winner instead of a little stop loss loser, right? So that's why I always try to push back against people who bring the more advanced concepts, because we aren't there as a group. Now, if you want to hit me up on a one-on-one, we can talk about that until, you know, to the ends of the earth. I'm willing to entertain it. But in the group setting, it's going to cause more confusion than it does clarity, right? Because most people in this forum aren't going to speak up. They'll sit back, they'll listen, and I'll ask, hey, does anybody have any questions? Nobody will say anything. And then 2 weeks later, I'll find out through example that, hey man, that person missed it, or that person didn't get it, you know, and for whatever reason, they didn't bring it to anybody's attention. And for 2 weeks or 3 weeks, they've been off on an island struggling. Maybe 2 months or 3 months, they've been off on an island struggling. And that's really not anything that I've ever brought up or anything that I've ever talked about on this call. So that's why I said, hey, on this next candle tap in, that's your trade, right? Because I can avoid having to say, hey, if you drop down on a lower time frame, this is actually 30 candles that it takes, you know, to get back up here. This is a daily chart, and it's one daily candle. But if you drop down to the 15-minute, it could be 30 candles before it taps back in. It could tap in 2 or 3 times, you know, in this one wick. All of that is not important to you as an individual if you just set your entry here and your stop loss here. Only thing that's important is, hey, I got it in the trade and I won, right? Now, for a more advanced trader who wants to not spend 48 pips on the trade, yeah, you can drop down to the 15-minute, look for your entry, look for your first break of structure, all that great stuff. But the problem with people who aren't advanced traders is you jump down there, you get confused, and you take a few L's, right? And now the next time I hear from you, you're pissed off because, hey man, you told me to drop down and take the first bullish or the first bearish order block. Well, that's not really the case. I told you to take your trade right here, put your stop loss here, but that wasn't good enough because you wanted a smaller stop loss. Worrying about the stop loss for beginners is kind of like worrying about a compound word for somebody who's just learning to speak English. It doesn't matter because you're going to mess it up more than you're going to get it right. So I would suggest that no matter what time frame you're trading on, right? This is the daily, but we can take these same concepts down to the 4 hour, right? The 4 hour is going to give you a better stop loss, but it's the same concept. Once you get your order block, if it taps you in, that's cool. If it doesn't, it's not cool. Don't take the trade. I'm saying the same thing. It doesn't matter what time frame you're on, right? But you have to understand that the further down you drop, the more disrespect you're going to see at your order blocks. And it's because the higher time frames are going to dictate the moves over the lower time frames. So this is a bearish order block. There's a wick that may or may not have tapped you in, and it went down. That's a good trade for you, right? But sometimes you're going to get a bearish order block. It's going to come down and it's going to push past the bearish order block, and you'll be mad. And I'll be like, well, trade it on the daily. Well, I didn't want to use that big stop loss. Okay. Those are decisions that you make as an individual. And I don't want to discourage anybody from trading the way that they want to trade, but I just want you to have the facts, right? The facts are you're going to win more trades based off order blocks on the higher time frames than the lower time frame. The reason behind that is because on the higher time frames, there's nothing there to retrace against you, more than likely, right?
And T, you're right about that, because I've been in daily order block trades that failed, and I saw why. I went to the weekly and it was like, you're right, the higher time frames are king. So if there's an order block on the weekly, but then there's a higher one on the monthly, guess what's going to happen? You're going to get stopped out on the weekly because it's going to go to the monthly. The higher time frames are king. Whether it's on the daily, if you go to the weekly and there's a higher order block than the one on the daily, you're better off trading the weekly order block than you are the daily when that happens. You know what I'm saying? So like, I'm understanding what you're saying. Like, yes, you it's not that you never get stopped out on the daily, but it is really, really important that the higher time frame you go and trade, the better success you'll have. And like, I completely agree. And it's not just because I'm agreeing just for my health or whatever, but like, I have experienced what you're saying, and you're right. And so, like you say, if we're beginners, for anybody that's a beginner, I just encourage you guys to listen to what Todd is saying. For everyone else who drops down in lower time frames, that works for you because you are more experienced. But for those of us who are not that experienced, or we are recovering from intraday to swing trading, like me, I've been trading for 2 years, but I was intraday. I was having some success, but not as much as I wanted, until I started becoming a swing trader and trading the way T taught me. I have had the most success I've ever seen because the higher time frames are king. And I just want y'all to like understand that. Just trust what he's telling you if you're new. If you're not new, I understand you wanting to do things how you do things because they work for you. But for all of us that are new, just trade the way he's telling us to trade. Everybody that showed us how they trade, that's cool. And now we know that for the future when we've had some success.
Yeah. So, that's all I basically wanted to say is if you're not having success, it's because you're doing too much, right? And you're trying to add to what I'm showing you versus just taking it at face value, right? You mark it up, you frame your trade, right? You mark up your order blocks and you take the trade. If you're adding to that by dropping down and trying to get a better stop, those are risks that you're adding to the trade, right? If you just allow the trade to take place, it either picks you up or it doesn't, then trust me, you'll do very well like that, right? Your stop losses might be a little bit bigger. That's just part of it. If you don't want a bigger stop loss, you'll trade on a smaller time frame. You'll take more L's that way. But hey, that's part of it. L's come with trading. So you got to take your losses, be graceful taking your losses, use risk management. I mean, those are the things that are going to make you a successful trader. Not anything, I'm not telling you anything that this is a big trading industry secret. It's just the way the market moves. You're going to win some, you're going to lose some, but don't try to add to what I'm telling you and then get pissy with me when it doesn't work out, because I've already told you, how to get into the trade, where to take the trade to. You just have to trust the process. Do I have any other questions? Everybody straight? Is anybody confused?
No, I got the message.
Hey, Brianna,
Yep.
do you,
Can you hear me?
yeah.
Oh.
I know you're always free. Do you, do you have a day that you want to teach your strategy on a lower time frame? Have you back tested your strategy enough?
Yeah. Yeah, that's all I really do is back test. I'm free anytime, any day. I'm just here.
Well, okay. I'm going to ask because like some people aren't ever going to be swing traders, and some people want to trade the lower time frame, but just make sure. Me and you talked about the strategy. I know that it works, but I think that well we'll get together this week.
Okay.
But I guess at some time in the near future, Bree can teach. What time frame do you use that on? A 15-minute?
I look at the 1 hour, sometimes a 4 hour, but the 15-minute, yeah.
So basically, it's a 15-minute strategy, or she trades. Is that intraday?
Yeah, it's like an intraday.
An intraday strategy. For anybody who's interested, I don't know what you guys' schedules look like, but I'll kind of put it out. So look for that to come out, I guess, later on this week.
Is Selena on the call?
No, I don't see her.
All right. Well, I guess I can talk to B Chase after this then.
All right. If y'all don't have anything else,
That's cool. I'm here.
I appreciate it.
Thanks so much to Someboy. We appreciate you.
Yeah, we do.
We really, really do. I'm a swing trader, y'all. I used to trade lower time frames, and I'm just a believer